Turkey's economy is firing on all cylinders. The rollout of vaccines and the easing of lockdown restrictions boosted the country's GDP by 21.7% between April and June, compared to the height of the pandemic in the same period last year. That's the fastest pace since records began 22 years ago. And as Mobin Nasir reports, the momentum is expected to keep demand for Turkish businesses high through the rest of this year.
Çetin Ozgul owns a kebab restaurant in Istanbul. He says business has picked up in recent months.
Last year, we had to rely on deliveries, which were not enough to cover our expenses. But after the rollout of vaccines, we have been able to start serving customers at the restaurant.
With the inoculation campaign well underway, Turkey started easing restrictions on indoor dining at the beginning of March. The health department says 45% of the population have received both jabs of the coronavirus vaccine. That's helped sales rebound at many eateries. Ortaköy is one of Istanbul's tourist hubs, and visitors have returned here in droves since the easing of COVID-19 restrictions. That's boosted sales for businesses from souvenir shops to cafes. In fact, consumer spending is up almost 23% across the country in the second quarter compared to last year. The manufacturing sector has seen a similar improvement.
This robust growth was not only due to the low base effect, it also shows a strong demand for manufacturing, investment, and sales abroad.
That's driven up exports by 60%, and it's encouraging companies to invest more. Gross capital formation is up by more than 20%, and business confidence has improved to 100.8, its highest level in more than 3 years.
Economic confidence indicators show that manufacturers are keen to expand their operations. This investment appetite must be supported effectively.
If the current momentum is sustained, GDP growth could exceed 8% this year, much higher than the government's initial forecast of 5.8%, a welcome boost for businesses that took a hit during the pandemic last year. Mobin Nasir, TRT World, Istanbul.
Well, let's get more on this now with economist Erhan Aslanoglu, who joins us from Istanbul. He's also an economics professor at Piri Reis University. Good to have you back on the program, Professor. So a massive 22% economic expansion for Turkey in the last quarter. We know that household consumption accounts for about 2/3 of the Turkish economy. But can you tell us more about what drove the growth in Turkey?
Thank you very much and good evening. The growth rate of Turkey was indeed within the expected range. The early indicators was showing us that the second quarter will come up with high growth rate in Turkey. When we look at the previous 2-3 quarters following the first quarter of the pandemic, Turkish industry, manufacturing industry started to grow very fastly due to both domestic and external demand. That led the capacity increase that led the intention of the manufacturers to enlarge their capacity. That meant that Turkish manufacturing output grew, and also the investment demand for machinery and equipment also grew in Turkey. The external demand also contributed a lot to the growth momentum of Turkey in the past 2-3 quarters. In the recent figures, the second quarter figures, we see the same picture, and it's together with the base effect, we see a much larger and more deep impact of the manufacturing industry, investment demand, and also exports to the growth figures of the Turkey. Also, we see the services sector, although partly opened in the second quarter, contributed to the growth rate of Turkey. And this is mainly due to the domestic demand and the consumption demand of Turkish consumers, we can say, actually.
Yes, but double-digit inflation is casting a persistent shadow over the economic rebound that we're seeing in Turkey. The latest inflation figures are due out on Friday. They're expected to show that consumer prices are continuing to rise by about 19%. Can you tell us, firstly, what's causing this ongoing rise in inflation and what needs to be done?
Yeah. Actually, there are several factors, but the most important one in Turkish inflation is the depreciation of Turkish lira. Uh, as Turkish economy is expected to give current account deficit due to its structure, this is increasing the demand for foreign currency and allowing the depreciation of Turkish lira. And as the Turkish industry and the Turkish economy uses lots of imported goods and imported intermediate goods, that's putting pressure on the cost of production and inflation in Turkey. And the other factor is the food prices. Unfortunately, both in the world and in Turkey, in the recent months, the pressure on the food prices is rising. In Turkey, it's unfortunately a little bit higher. And we see in the second quarter of GDP growth, the rate of increase in agricultural output is around 2.3%. Compared to other sectors, it's quite low, indicating that the supply of agricultural output in Turkey is limited, putting pressure on the prices on the agricultural and food side. So the second factor is the food prices. And the third factor is imported inflation due to high intermediate goods prices in Turkey. Raw materials, oil, and all other raw material prices has been rapidly rising in the world, and it's also reflected in Turkish cost of production. And one final point, maybe the Turkish economy is growing very fast, one of the fastest in the world, and a part of this growth is due to domestic demand. That means the economy is heating up, and demand push inflation is also observed in the Turkish inflation data.
Okay, Professor Erhan Aslanoglu, we'll have to leave it there, but thank you as always for sharing with us your analysis. We appreciate it.